This is not financial advice. I'm recording my thoughts about Tesla's stock split. The stock split was announced back in June, and I made a video on June 10th in which I predicted about $1,350 stock price before split and $450 stock price after the split. That was back in June, but the official stock split date is August 25th, and the stock is surging and it's currently trading at about $930 before the split. A lot of investors are buying this stock anticipating that the stock will surge further after the stock split, because in the previous stock split the stock price actually went up after the split as well. So now investors are anticipating that the same would happen again. In my opinion, it is not wise to think that the stock split will result in stock surging further, because the opposite also can happen. A lot of people might buy the rumor and sell the news, so the stock can go down after the stock split. As we all know, stock split will not change anything with respect to the business model. Just because they did a stock split doesn't mean that they would produce more cars and will have higher net profit margins, right? Stock splits make the stock more affordable to people who cannot do partial stock investing. For example, in the US, we can easily buy partial shares of Tesla stock, but if someone lives in a country where they do not offer this partial share buying, then they have to shell out $800 or more to buy one Tesla stock. And in addition, because of this stock split, the option contract prices would be much lower, so more and more people will participate in the options contract trading. Since more people can involve in Tesla stock trading, the activity would increase, and that can result in a slight price surge, but it should not be very significant. In this video, I want to do an evaluation of Tesla stock in January of 2026 with different multiples to see different outcomes. In 2021, they made about $54 billion of revenue and they promised 50% growth. So that will result in $275 billion of revenue in 2025. So we also need to double check this $275 billion of revenue to see if it's physically possible. In my opinion, this $275 billion of revenue seems realistic because Tesla can get a capacity of 5 million cars in 2025. So if I assume $50,000 per car, that will result in about $250 billion of revenue with respect to vehicles. And with respect to full self-driving, I think it's impossible to get the full self-driving in 2024, including all the approvals. But in my opinion, there could be some subscription service, like we'll pay $200 a year to use some of their autopilot functionality. So by 2025 December, there would be about 15 to 20 million cars overall in Tesla's ecosystem, and I'm assuming that about 10 million, like half of those cars, will choose to pay $200 a year to avail those autopilot activities. So that'll result in a $20 billion of revenue for Tesla in 2026 using this autopilot. And I'm assuming that the rest of the 5 billion would come from energy and other bets. Now we have to come up with the net profit margin. I want to look at the previous 4 quarters. In the most recent quarter, their net profit margin was 13.34%. In the quarter ending in March of 2022, it was 17%. In Q4 of 2021, it was 13%. And in September of 2021, it was about 11%. So you can see all of these net profit margins are in the range of 11% to about 17%. But in 2025, because of the economics of scale and more efficiency built into the Tesla ecosystem, I'm assuming 20% net profit margins. That is very optimistic for an auto company, but Tesla can achieve it because of its efficiency. So if I assume 20% net profit margin, that will result in a $55 billion of net income for Tesla in 2025 financial year. And now comes the most interesting discussion. What kind of PE are we going to pay for this company? A realistic PE for this company, which is growing at 50% rate and have a 20% net profit margin, is actually about 25. So I'm putting 25, and if you can do the screenshot that I'm sharing, it's highlighted in the green zone. So if I assume a 25 multiple, that will result in a $1.37 trillion of market cap for Tesla, and that will result in a $1,313 stock price before split and $438 stock price after this 3:1 split. So currently, before the split, it's about $930. So that's going to result in a 1.4x. That's about 40% gain in 4 years, which is the reason why I'm not buying this stock at the moment. But please note that I have owned this stock since March of 2020. I still have significant positions, so I may be biased a little bit when it comes to buying this stock. In the second case, I'm assuming 35 multiple. That's a reasonable stretch, and investors will be willing to pay up for growth if Tesla is still growing at a very fast pace in 2025. So that is the second case, and I'm not counting on that, but it's just for reference. So that'll result in a $617 stock price, which represents 2x in 4 years. And in the third case, highlighted in red, I assumed a multiple of about 100. Currently, people are paying 100 multiple, right? So they can pay the same in 2025. So if we assume 100 multiple, that will result in $1,763 stock price after the split. So that's about 4.7x, which seems extremely attractive. But I highlighted that in red because I think it would be crazy if people pay a PE of 100 in 2025. But Tesla's investors are a cult, right? So I wouldn't be too surprised if they actually go ahead and pay 100 multiple in 2025 for this company. But at the moment, like I said, I'm going to make my investment decision based off of this $438 in 2026. So I want to keep my discipline and buy the stock only if it falls to about $200 after the split and $600 before the split. And I hope this gives a good reference point of where this stock is headed depending on multiples. I feel like the revenue of $275 billion is solid. I think the actual revenue would be very close to that number. And assumed net profit is 20%. That is also optimistic, and I'm assuming that Tesla would be very, very efficient, right? So $55 billion of net income is also very close to what they would make in 2025, in my opinion. So the only thing that we can play up is the PE ratio or the multiple. So 25 seems very reasonable, 35 seems optimistic but still possible, 100 seems impossible, but we never know with Tesla. So in summary, stock split will not do anything to the stock's fundamentals, and I wouldn't buy this stock because it's going to go up or down after the stock split. I would focus on the fundamentals of how the company would make profit, how it's going to have this multiple expansion, but stock split is something that I'm not excited about.